What's up, everyone? Dylan here. I wanted to hop on to do another episode of the weekly analysis video. Before I get into it, I wanted to say that this coming Monday, November 17th at 7 p.m., I'm going to do a YouTube live stream to celebrate 5,000 subs on this channel. So I appreciate all of you guys for subscribing and supporting. And on that live stream, I'm going to do market analysis. I'll do a Q&A session, so on and so forth. So again, I hope to see everyone there. Now, let's get into it. So, since the last time I posted, the market came off in a pretty big manner, considering the Nasdaq had its biggest weekly pullback since April. Okay, so what did I talk about last week? Last week I talked about both green flags in the market and red flags. I'm going to focus on the red flags since the market did come off, right? So the red flags that I talked about were poor breadth, right? We talked about the Hindenburg omen, what that pattern was, what it implied, right? It implied that the market tends to come off and have a topping period and starts to come off to the downside when that pattern triggers its, and then we also talked about the extended / extreme put to call skew, which implied that participants in the market were chasing the upside momentum via call options, right? The folks that may have missed out on a lot of the moves since April lows, they felt massive FOMO, and in order to capture that potential Santa Claus rally, they got into calls when the market was making new all-time highs. Around here, and the put to call skew became at a very, very extreme level that usually tended to coincide with a topping period. Okay, but I also talked about very bullish pieces of context as well last week, and I basically said that price action was going to confirm which side of the spectrum was going to basically come into fruition. So, in hindsight, it was the downside momentum, okay? Why did the market come off as it did last week? If you guys want to read that, pause this video, but basically this is from Adam Crisafulli, and he talked about what was going on in the AI / semiconductor space and why the market narrative turned in a quote-unquote skeptical direction, okay? So definitely read that if you guys want. So despite the market coming off, I was actually pretty bullish on Friday, right? The market came into a very, very solid area that I was very, very vocal about in the Discord. I said, hey, in plain English, it would be very foolish to get short down here, right? So I'm going to go ahead and show you guys some of the Discord posts. You guys could pause it to read it all, and then we'll get into exactly some of the things that I saw. Okay, so this is the some of the Discord posts, right? You could see I said every single time the 4-hour RSI entered into oversold territory when ES was at support since August, it has worked like a charm, right? These were the factors that I'm going to get into. I said, am I overly bullish down here? No, right? NVDA got down to the 180 level. This is the level that I talked about the day prior. I posted about it on Thursday before the Friday move to the downside, right? After a 15% drawdown in a week, right, it came into a key support. Bitcoin was stabilizing. S&P and the Nasdaq were oversold. RSP was holding, right? So basically I said in plain English at 12:18 p.m. Eastern time on Friday, I do expect a near-term bounce from current levels. Okay, where was that? Let's go to a 15-minute chart. That was at 12:18 p.m. and you could see right here was the 12 p.m. candle on a 15-minute chart. So it was in these two candles is when I said, hey, I do expect a near-term bounce because we are at a very, very strong area. Okay, so let's get into what I saw. First off, NVIDIA 180, okay? Why is that important? Basically, in very, very simple terms, NVIDIA rules the freaking market, okay? What do I mean by that? This is from Goldman Sachs, okay? You could see Goldman's Bryant Garrett highlighted that the S&P 500 is more tightly correlated with NVIDIA than it is with the 500 names that make up the index. So it really is the case that as goes NVIDIA, so goes America, okay? So I basically said, hey, everyone. NVIDIA is coming into the 50-day moving average and the $180 level. And if it bounces, guess what? The S&P and the Nasdaq are going to follow in its track. Okay, so 180 was right down here, right? And you can see it did get a little bit below. Don't get me wrong, it wasn't perfect, but it held in that general area. Okay, what else? You also have MAGS, right? MAGS is the Magnificent 7 ETF. These are, the several biggest names that make up the S&P and the Nasdaq, right? These are your NVIDIAs, your Microsoft, your Apple, Google, so on and so forth. This thing got down to the 50-day moving average, right? Almost perfectly. It was the first test that it had since early May, right? If we really, really zoom in, you can see it came right down into that and got bought in a very, very quick manner. Also, US 100, which is the cash Nasdaq. Recall the October 10th drop when I bought the dip on several names, right? That's exactly where it came into, the 50-day moving average. And you can see this bounce also in early September, October 10th, and yet again, when? On Friday. So this, before it head on, right, this 50-day moving average on the US 100, or you could use QQQ, whatever floats your boat, this is, in my opinion, the single most important level or line in the entire market. Basically, if and when the NASDAQ 100 breaches below that and closes below it, then I do see that an outcome where the market does continue to the downside in a continuous manner where you'll see much more of an unwinding. But as long as dips continue to get bought at or above there, I think the bull case is very, very well intact. Okay? So, MAG's 50-day moving average, NVIDIA 180, right? The fact that as goes NVIDIA, so goes America, right? US 100, right? The NASDAQ 50-day moving average. The NASDAQ also had a key area of support, right? In terms of a trend line, right? You could see here, draw a trend line from the May 2020 or May 23rd, 2025 lows. You attach it to here, and you could see 1, 2, 3, 4 different lows at that, including the one on October 10th, right? And you can see, again, it did get below, but it did not last long below there, right? You could see it did get below, but it was very, very, it stabilized very sooner than later, I should say. Okay, so that coincides also with that 50-day moving average on the Qs as well. Okay, also, Microsoft was down 8 days in a row. Okay, Microsoft 8 days in a row was the longest losing streak since 2011. So you also had different names that were very oversold on a higher time frame, right? So we go to the 4-hour chart, you could see Microsoft was oversold, right? NVIDIA wasn't quite oversold, but it was getting down to that general, extreme area, right? S&P oversold, Nasdaq oversold. So these names oversold when combined with a key area of support since August has worked like a freaking charm in plain English. Okay. Also, Bitcoin got down to 100,000. Okay. So Dylan, why is Bitcoin, important when looking at the S&P and the Nasdaq, right? Let's talk about it. All right. This was a post that I made. Let's see, I made this post the 4th, right? Last Tuesday I made this post, right? Go ahead, pause it, read it if you want. But I basically said that crypto is a key gauge in terms of the, what the direction of the equity index futures, S&P and the Nasdaq, are going to do, right? And I talked about 100K being very, very important. Okay. Another reason, again, pause that if you want to read it. Another reason is this right here, right? NVIDIA and Bitcoin tend to trade in close tandem for a long time, right? This is going back to 2023, right? It tends to move in a very, very correlated manner. And you can see recently NVIDIA has been going higher, right? This was posted, I believe, 2 weeks ago. NVIDIA was going higher, whereas Bitcoin was coming off. Okay, so in plain English, right, common sense, if Bitcoin were to stabilize, guess what? NVIDIA should lead the way higher, right? So as long as Bitcoin continues to the downside, right, and me using the 100,000 psychological whole number to gauge that, right, as long as Bitcoin continues to hold there, the S&P and the Nasdaq should stabilize because NVIDIA will stabilize. Remember the picture I showed you guys earlier. As goes NVIDIA, so goes America, right? And NVIDIA basically rolls the market. So Bitcoin, being that it tends to move in tandem with NVIDIA, you want it to see it stabilize and hold that 100,000 level, okay? If Bitcoin were to break below 100,000, it could spark retail selling and systemic supply. Okay, so you do not want, if you are a market bull, you do not want to see Bitcoin break below 100,000 and stay below 100,000. So it tested it 3 different days in the last week or so, and because it held there, it helped S&P and the Nasdaq hold as well. Okay, so that's that. Okay, so let's get into some other stuff. So again, as you can see, S&P had a trend line. Nasdaq had a trend line. Nasdaq had the 50-day moving average. SPY also hit the 50-day moving average. MAGS hit the 50-day moving average. NVIDIA hit the 50-day moving average and the 180 level, right? Microsoft down 8 days in a row, longest losing streak since 2011, right? So there were multiple pieces of evidence and context that were backing up the fact that the S&P and the Nasdaq were due for a relief bounce. Okay, and I said, hey, I can't get overly bullish down here unless an area of resistance clears. Okay, and that's exactly what ended up happening. S&P ended up clearing a resistance, and basically shorts covered. Okay, so where does this bring us now? Oh, another thing I want to talk about is the RSP, right? So what do I mean by that? Let's go to SPY, right? From Monday, November 3rd, right here, to the 7th, right? From November 3rd to the November 7th, right? Last week, the S&P and the Nasdaq were clearly much lower, right? Very, very clear in terms of weakness, in terms of a downtrend. RSP, on the other hand, RSP is the equal weighted S&P 500, was totally sideways, right? This is that was November 3rd to November 7th right here, right? Despite the S&P and the Nasdaq going lower, showing clear signs of weakness, the overall broader S&P went sideways. Okay, not only did it go sideways, but it also held this area that has been acting as support since August 13th, right? Just totally going sideways, okay? So this is a good thing, right? We talked about negative breath, poor breath last week, hence the Hindenburg omen, whereas the last week it has improved tremendously, okay? So Goldman says, in our view, this supports the case for strategic rotations rather than a structural market concern, right? What does that mean? That means that, yes, the tech stocks, right, tech names last week led the market lower, but it was solely tech names for the most part, right? Whereas the broader market sustained value and went sideways, okay? What does that imply? That implies that the tech names no longer need to single-handedly prop up the market because you have other names in the broader market in other sectors that are doing a good job in terms of catching up and going from lagging to being strong. Okay, so again, Goldman Sachs views this as bullish. Okay, could it change? Of course, but for the time being, for the last week, it did a phenomenal job in terms of sustaining value and propping up the market, the rest of the market, despite the S&P and the Nasdaq going lower. Okay, so now that the S&P and the Nasdaq are going higher, this RSP, the broader market, should get better in terms of the breadth. Okay, so that's very, very important. Despite the S&P and the Nasdaq being, a bit closer to all-time highs, back to the highs, right? S&P right now is literally 1% away from all-time highs. You would think that the fear in the market would have subsided, but you are absolutely wrong in assuming that. Last week, the fear and greed index was extreme fear. It was the lowest fear, or the highest fear, right? The lowest number on this index since April lows near Liberation Day. Okay, that's crazy. Okay, another thing is the fact that the University of Michigan consumer sentiment that came out Friday, right, this past Friday, was the second lowest sentiment reading of all time. Second lowest of all freaking time. That's insane. And to really put this into perspective, it says, this is from, I believe, Goldman Sachs. Reminder that the United States has had 11 recessions since 1950, and yet sentiment on economic conditions has never been worse. For some context, that is the weakest sentiment reading in 45 years, with stocks 1% away from all-time highs. That's insane. So, in plain English, there continues to be massive fear and massive pessimism in this market. And what does that set up for, right? Let's talk about positioning. You guys will hear me say many, many times on this channel, positioning is the most influential piece of markets being moved, right? The markets move on positioning, extreme positioning, aggressive positioning, so on and so forth. Lopsided positioning, in my opinion, is the most powerful piece of context in the entire market. So let's get into it. This is from Goldman. This was posted in this past week, right? The Goldman U.S. Equity Sentiment Indicator shows that investor positioning is light, right? It's at 0.9, and anything of 1.0 and higher to the downside or negative, right, shows light positioning. Okay, so with light positioning, this leaves room for underweight investors to chase upside momentum, which is basically what we've been seeing the last few days since the Friday lows. So again, I've said it many, many times on this channel. When you have lopsided positioning, underweight positioning in equities, and the equities go closer and closer and closer to all-time highs, guess what? That FOMO kicks in, and the investors that don't have any exposure to equities say, oh my gosh, I'm going to miss out on this move. What do? They chase higher, and it causes the market to continue to the upside. Now, is that guaranteed to happen? No, but you got to understand that is a real, real threat to the bears, okay? Another thing is the gamma, right? Gamma, this is from Goldman. The gamma is high, right? It's a high gamma environment right now. What does that mean? That means that dealers buy on weakness and sell on strength. So anytime the market, the S&P and the Nasdaq, come off to the downside, pull back, the dealers are absorbing a lot of that selling pressure because we're in a high gamma environment. So this can be bullish, right? Dealers turned long gamma as markets sold off and had to buy deltas, acting as a shock absorber. Upside has dealers enter short gamma land, right? Making them buyers of deltas again, acting as a magnifier of vol as we move higher. Okay, what does that mean? Again, very, very simply put, anytime the market comes down, dealers have to buy. Anytime the market goes up, dealers have to sell. So it acts as basically it's a piece of support anytime there's a pullback, in plain English. Okay, so that's another thing. Okay, so the lopsided positioning, extreme fear, extreme pessimism, um, and the fact that the gamma aspect is back in high territory are all bullish pieces of context. And very, very important too. And I've talked about this many times, but this is a different scenario. This is from Goldman. It says, what are the year-end returns of the index when the first week of November is down after having been up 10% since November 1st? Okay? And these are the outcomes. On average, right, year-end returns for S&P are 2.82%. Okay? And for the Nasdaq, average of these year-end returns is 1.8%. So, this is from Goldman. History tells us it is not at all uncommon for the first week of November to have been down after a positive run to that point, which is exactly what happened last week. This, coupled with the fact that the flow of funds remain positive for U.S. equities, supports our conviction that the Santa Claus rally is still on for this year. Okay? And I agree with them. Okay? So, very, very simply put, again, I always say you can't be closed-minded. I know that I've been very, very bullish in this video, but again, I continue to be bullish until proven otherwise. So going forward, as long as the gap fills in the S&P and the Nasdaq, right, from the weekend gap, right, both the S&P and the Nasdaq have those. Okay, as long as price stays above those, I believe that bulls remain in control, where that Santa Claus rally is very real and should come into fruition, where every single dip continues to get bought and we make, higher highs, higher lows. Okay? If those gap fills get filled and they do not sustain, the next spot down is that Nasdaq 100 50-day moving average. Okay? I would think that if that gap fill does not act as a support, right, in a quick manner, right, gets below, gets back up in a quick manner, right, if both S&P and the Nasdaq break below there and stay below there, the next level to the downside would be that Nasdaq or QQQ 50-day moving average. Okay, and if that were to breach and close below that 50-day moving average, that's when you could really get some downside momentum. Okay, so as long as those gap fills on the S&P and the Nasdaq, as long as price sustains above there, I'm in bull mode. Below that, I'm neutral, and then up to that 50-day moving average, below the 50-day moving average, I would get pretty bearish. Okay, so that's where I stay right now. Reminder, November 17th, this coming Monday, 7 p.m. Eastern Time, I am going to do a live stream on YouTube going over analysis, Q&A, so on and so forth. And I appreciate all of you guys in terms of support, and thanks for the recent milestone of hitting 5,000 subscribers on this YouTube channel. Okay? Hopefully this was a good video. If not, let me know. Feedback is always appreciated. And I will talk to you guys on Monday. Peace.